Thank you, Vijendra, to give me this session. And good afternoon and a warm welcome to all the respected chartered accountant, industry leaders and distinguished guests present here today. Now I invite our Central Council members, C. Durgesh Kabra ji, on the desk with our speaker, Ratan Moondra ji. Jinal madam. So, at the outset, I want to thank our learned speaker, Ratan Moondra ji, and our CCM, Durgesh Kabra ji, to give their time and taking out time to be part of this important session. So, thank you, Ratan ji. Like, as Rajesh ji asked about the setup of GCC in India, this session is based on that. It give me immense pleasure to welcome you all in the insightful session on the comparative analysis of setting up GCC in SEZ, IFSC, DTA and STPI across different states in India. I want to invite our Central Council member, CA Durgesh Kabra ji, to say some few words, insightful words for this session. Sir, please. Durgesh ji.
Good afternoon, one and all. It's indeed a pleasure to be part of Conclave on Global Capability Centers. And I think the speaker today is with us, CA Ratan Moondra. And as far as I know about Ratan is the chartered accountant who has always practiced in a different arena. He has never been into the area of the conventional practice at all. When 100% EOU came, he started practicing EOU. When SEZ came, started practicing SEZ. When some other opportunities come, setting up of any free trade zone comes, he starts exploring all those kind of opportunities. Now, global capability centers, GST also implementation when it has come. He started in the early stage of GST. So he is the right person to make the comparison of GCC setting up in the SEZ, IFSC, STPI, DTA in various Indian states. And I missed out IFSC also. He is regular consultant on setting up of the companies and businesses in the IFSC GIFT city. So friends, when you all are here, you are leading the organizations. And when you are leading the organization, my request to all of you, subject experts are there. They'll be talking to you about the subjects. They'll be letting you know that how your organization can take benefit of these kind of facilities which is being provided by Government of India. But I would like to make one request to all of you. You all are chartered accountants, or majority of you present here is chartered accountants. Some may be the non-chartered accountants who are the CFO, CXO of any organization. But let me tell you that the chartered accountant professionals is a community which suits more to any corporate, whether a CFO, a CEO, or in any of the department of the organization. And why I am telling you all these things? Because when I headed the committee called Committee for Members in Industry and Business, I got an opportunity to meet with the leaders of our professions who are the entrepreneurs. And when I met all of them and had a program called Chartered Accountants, the Growth Gear on G Business, I came to know that they are employing the chartered accountants not only into the accounts department, but into all other departments, including sales, HR, commercial, what not is there, everywhere. But the only thing which all those senior leaders who have reached to the pinnacle of their organizations, they said, what is needed for a chartered accountant is just to pet him for 2 years when he is working with all of you. The moment you appoint a chartered accountant in your organization, don't feel that he is your competitor. Just pet him for 2 years, guide him, and I am sure that that fellow who has joined your organization will become an asset, and you will become the wealth of the company. That is what is needed. So that kind of feeling should be with all of us. That will only make difference for our profession. If we really wish that our profession should scale to new heights, then these kind of opportunities are required to be provided by all of you who are at the higher positions in the organizations. Today, the ratio of the chartered accountants shifting from practice to the industry is very large. Approximately 90% of the pass-outs are joining the industry or services. And when this kind of ratio is there, and we 100% believe that academically or technically we are strong, but somewhere we lack in some communication styles also. At that point of time, if you pet them, guide them, I think they are going to do wonders for your organizations. With this, I will not talk much on the subject. The reason being, subject expert is there. He is having the experience of more than 25 years of doing practice in different areas. So he is the right person who will tell you that if you want to set up GCC in these areas, whether it is SEZ, IFSC, STPI, DTA or so, how it can be and what kind of benefits you are going to get. With this, thank you all for giving me a patient listening, and I wish that you support the young chartered accountants who are joining your organization in time to come and see that our profession scales to the new heights. Thank you very much.
Thank you, Durgesh for your address. And I think in this session, with the help of CA Ratan ji, we will understand the practical, regulatory, tax and strategic difference between various models and locations available for establishing global centers and capability center. As professional, our responsibility is not only to interpret law, but also to create value-driven solutions for industries and entrepreneurs. Different states in India are offering unique incentive, infrastructure, and policy support, making this session highly relevant and timely. And I am very much confident that deliberation in this session will provide valuable insights, practical perspective, and actionable knowledge for all participants. So knowledge sharing forum like this strengthen our professional excellence, prepare us for the future global business transformation. So I request our CCM and General Council colleagues, General Savla Madam, to present a memento to our learned speaker and our WIC chairman also. Please. I want to briefly introduce the profile of Ratanji. So Ratanji is a chartered accountant and founder of MoonSEZ Consultant Private Limited, a leading consultancy organization focused on SEZ, IFSC, taxation, customs, incentives and regulatory compliance. With over 28 years of professional experience, he has played a significant role in the evolution of SEZ IFSC consultancy practice in India, supporting hundreds of approvals and compliance assignment nationwide. Under his leadership, MoonSEZ has expanded it into a multi-locational consultancy group, serving more than 1,200 clients, and was among the early advisory firm to enter the GIFT IFSC ecosystem. He is widely respected for his expertise in SEZ and IFSC regulation, practical advisory approach, and contribution to policy discussion and professional development within the GCC and IFSC ecosystem. So let us actively participate, exchange ideas, and make this session highly enriching and meaningful for everyone present here. Thank you. And now, Ratanji, please, the dais is yours.
Thank you, ma'am, for my introductions, and Durgesh-ji, thanks, and Saurabh-ji, especially that you have called me for this session, because earlier I was used to speak on EOU and SEZ, and since that, after that sunset clause on 2020, that the theme of the SEZs and EOU earlier 2012, it has been set sunset clause, so that the EOU and SEZs has come down, but that time again the IFSC has come, so we have entered in that practice. I tell you, I started this practice 25 years ago, when you are aware about it that the ATHSC was going to phase out, that Yashwant Sinha has declared in the budget that the benefit under the income tax under ATHSC is going to phase out and it will be stopped immediately. So that time that 10A and 10B were the available provision in income tax. So, and that was also that within 28 days, because that time the budgets comes on the 1st March or like that things, and up to 31st March you will have to complete the 10A, 10B license just like that in STPI and EOU, and thereafter on up to 31st March, you will have to start the production to get the 10-year tax holiday. So all the industries in STPI or in that diamond market or other market has gone to in that area, and then they have got it licensed. I am aware about it that at the time 8,000 STPI licenses have been issued in that all over India. So that time I have started that practice. Accidentally I have come in this practice, and now by learning things, I got and grow in that like. Sir has asked the questions, how to get that clients in this arena. So I tell you that you will have to first dream about it. Whether the capabilities is there or not, you will have to dream that I wanted to be a GCC consultant. I wanted to be the consultant in this arena in the India topest consultants. So when you start to dream, then thereafter that ways comes forward. Okay, I start, and since I completed 25 years, Durgesh is also told, and so that I bring the capabilities and that experience which I got into this arena, SEZ, EOU, STPI, and IFSC. So in today's presentation, I wanted to do, as the first session speakers, Mr. Asutosh ji, he is the CGM of the IFSC, he is the business development head. We are very much interactive with them. And second, Mr. Guru and Jena's partners, he has also covered all these materialistic things in GCC. So the very few things has remained to me, and I have also got less time because the lunch is there, and within 1:30 I wanted to close. I think 30 minutes is there with me, or I have that much time? Saurabh? Okay. So I have been given the task to differentiate between SEZ, STPI, IFSC, and DTA. DTA means domestic tariff area. Anywhere you can set up, just like that your office is also called as a DTA, but the 3 area is regulated space where you will have to take the licenses. And what is the differentiated between the states which is brought that policies? Basically, In first policy, I have seen that the states are very aggressively going on, and they have made it that policy. They are giving the incentives, and incentives to such type of businesses are more than the 10 to 15 items. I will tell you what the items are there. They are giving the incentive on payroll, they are giving the incentive on capital subsidy, they are giving an incentive on property tax. So that I will cover in my presentation. So first, introduction to GCC landscape. I think it has been done by the earlier speaker. Comparative policy analysis, I will tell you. State-wise analysis, I will tell you. Infrastructure and talent, I think the other speakers has covered, but still I will tell you what that way differentiation between the different states and different centers, and strategic recommendation where you have to set up. So if you are less number of that persons will be there, then where do you set up? If you wanted to do the more and maximum, what type of capabilities is there, just like that if infrastructure is there, or that if the manufacturing setup is there, the design and engineering setup is there, where you will have to set up. Again, strategic imperative of the GCC setup in India, world-class talent pool, it has been already discussed. Regulatory support, so ultimately in all 4 schemes, the regulatory issues are there or regulatory flexibility is there. I will discuss it. Tax optimizations, that is also very important theme that in the gift city, the tax optimization is there, otherwise the income tax is not there. So I will tell you. And time zone advantage. India is located at a very strategic positions where the time zone you can cater to all our world on 24/7. So that is very important. What is special economic zone? In special economic zone, there are benefits, key requirements and challenges. So special economic zones are the zones where the building has been developed in either 25 acres area, because when the SEZ has come, the requirement of minimum land area was the 25 acres. Then thereafter it had been reduced. So these are the world-class constructions has been done there, and dedicated zones are there, safety and security, and the level of the infrastructure is like this European or American standards. The custom duty exemption on procurement, if you are importing any equipment, capital goods, then there is no custom duty. So that is the advantageous positions. Zero-rated GST procurement. In the other places, GST is inputable, but here that the GST is not charged, so there is not taking input or taking refund for the exports-oriented activities. So zero-rated benefits are there in special economic zone. Stamp duty is exempted. If you are taking the space, then that whatever the stamp duty is there in the contracts, it will not be there. Lower power cost due to SEZ developer have the deemed distribution license. Just like that, if you are here or in your office, you are taking the electricity from MSCB. But here, in special economic zone, government has given the deemed distribution license. So you can take the electricity from any grid. So there, the rate of the electricity is 4 or 5 rupees. Wherever that, if you are taking the electricity from the MSCB, near about commercial rate is 11 or 12 rupees. So that is the 5 rupees advantage, and the majority of data centers are coming into special economic zone because that cost margin are there. Other state government benefits which has been declared by the SEZ authorities of the state will be available to you. What is the key requirement and what is the differentiation is there with the other policies? Is first minimum area. In special economic zone, you will have to take a certain area of 5,000 square feet or 10,000 square feet, because the developers don't give a very small office other than the gift city, because in gift city, you can take the 4-seaters office also. Second thing, positive net foreign earning exchange, NFE. NFE criteria is still there in the special economic zone, that whatever the exports you are doing means foreign currency you are bringing, and whatever the foreign currency you are expending. So that should be the net positive. That is the requirement is there. Third is the ring fencing operation, because you will have to go into the dedicated area. You will have to go as per the rules and regulation of the particular licenses. So this will be the restrictions will be available to there. And what is the challenges? SEZ Act and rules, regulations, compliances you will have to fulfill. Then DTA sale of services in foreign currency only. That is the big obstructions into the SEZ policies, which has been timely, it has been told to the government that you remove it. So whatever the businesses you are doing from SEZ, you will have to do in foreign currency. If you are selling services into DTA, you will have to get the foreign currency. If it has been removed, the SEZ again flourish, but government has not removed it because this section 2Z is mentioned in SEZ Act and SEZ Act has not been amended. Then inward and outward is controlled by the SEZ Custom Authority. So there are the challenges are there in SEZs. So you see whether the benefits are not much, then you will have to opt the other schemes. These are IFSC. I think Mr. Ashutosh has told you, informed you that what are the benefits is there available in IFSC, but I tell you, out of 25 years, any 20 years you can take the tax exemptions. So if you wanted to escape 5 years, you can leave it 5 years and the rest 20 years you can take it. Earlier it was there 10 years. It has been introduced in 2026 budget. So this is the big benefits has been given. No minimum alternative tax in particularly conditions. MAT is there, 9%, but if you are taking the new regime, then there will be not be a MAT applicability. No security transaction tax if you are doing the share market operations. So there is no STT, no CTT, no dividend distribution tax, exemption from IGST on import of goods, just like that SEZ, whatever the benefit is available in SEZ, that will be a benefit available into IFSC, and unified regulator for all financial services. Just like that in India, if you are doing the businesses, the SEBI is there, the RBI is there, the IRDA is there, or the PFR, the registrar is there. But here only the IFSC authority are the one single regulator which has made that life easy. Eligibility activities, this is there, GIC, fund accounting, corporate treasury, fintech, data processing, and aircraft leasing. I will tell you each and everything because we are doing the practically in all these fields in GIFT City. Key challenges is again limited to specific categories. Only certain regulated activities can be given the license. So all activities cannot be there, and you will have to first see what the categories are there, and then you will have to apply for licenses. Second thing, geographically restricted to GIFT City only. This is the demand from all over the state government that they also want the GIFT City to be established in their state. Just like that, I am aware about the possibilities that at the time when Fadnavis sir first government were there, they have made a committee that why not GIFT City should come into the Mumbai. But since the government has decided that the first IFSC should be matured and then thereafter they will bring it to, even though Bihar government has also asked and the other government is also asking, but government has restricted this into the GIFT City only. Geographically it is in Gandhinagar, and ecosystem still it is being matured. And again, one issue is there in the GIFT City, which I wanted to tell you, that work from home is not allowed. Just like that in SEZ, work from home is allowed. Just like that in STPI, work from home is allowed. But since that it is a financial activities, the government has not allowed the work from home activity. So these are the challenges, particularly in IFSC. These are the permissible regulated business categories in GIFT City. I have just bifurcated category, subcategory, category, subcategory. This is very important to understand what the way you can fit the client's requirement into the GIFT City. So ancillary services, whatever the services you are providing, it should be fit into the ancillary activities so that just like that providing auditing services is ancillary activities. It is not included in BATF. It is in ancillary activities. Fund accounting is an ancillary activity. So you will have to see which type of activity you are doing and where it is fitting in the category. Banking, again, the BATF services, accounting services, bookkeeping services, taxation services, and one more services is the forensic accounting services. So these are the set in BATF. In capital market, again, all these the services are there. Broking services is there, share market, custodian services, debenture services. In finance company, aircraft leasing, I'm telling you that we are the consultant in GIFT City, and we have established our office in 2014 and 15. So very important in such type of consultancy, you will have to take the early bird advantage. If you are having that early bird advantage, you go there, be in that ecosystem, just like that Guru sir has told in earlier presentation that they have set up the 7 GCC setup. So you will have to take the experience from that, and then thereafter you prepare and you get the reference, this thing. Here also we have got it that 2014, Bombay Stock Exchange were there, he wanted to set up into the GIFT City. But how to do it? Because that time the regulation were not there. Only the SEZ Act were there, and the government has initiated only that the capital market activities can be done into the GIFT City. So the Bombay Stock Exchange has told us, and they asked us to prepare that application. We have prepared it, and we got the license in GIFT City. So thereafter, the all capital brokers, capital market brokers has come. We have get it licensed there, and then thereafter we have started our operation in the GIFT City. In finance company, aircraft leasing, as Mr. Asutosh has told that India was not having any aircraft until the GIFT City has been evolved. Why? Because all the aircraft were purchasing by the Ireland jurisdictions, because the taxation was taxation was not available in India. Whenever the aircraft come into India, the 34% taxation was there. But now, if you are owning an aircraft in India, you will have to bring into GIFT City as a zero tax, because the custom duty is not there and GST is not there. When you are leasing it to the Indian operator, there are 3 types of operator is there. One is SOP, schedule operator, one is non-schedule operator, and one is flying training institute. So government has made flying training institute and schedule operator a zero custom duty. So when you are removing it to the IFSC to these operators, then you need not to pay the taxes. So that flexibility is given to India, to the all operator, then that type of flourish. Near about 271 aircraft, it has been mentioned in the Asutosh sir side. We have cleared near about 85% of that aircraft into India. So we are doing Indigo aircraft, we are doing for Air India, we are doing, why we are doing it? Because we have the custom license also. Being a company, being entitled to do the practice, we have established the custom license for aircraft leasing and for the ship leasing. So we are doing majority of the work into the GIFT City where the aircraft and ship is clearing. Then thereafter, finance company, core finance and non-core finance, such type of activities we are also doing. Global treasury centers, we are doing for some clients. Fintech activities are there, so that this is thing. Fund management like AIF, category 1, category 2, and category 3. More than 100 funds we have registered and listed there. So, and we are doing day-to-day compliance consultancy for all these activities. Global in-house centers, IFSC. So, insurance. Insurance is one more sectors which has come into GIFT City. Why it has come to GIFT City? Because the reinsurance businesses is required. Whatever the insurance companies are doing the business in India, they will have to reinsure for certain percentage of their premium. So in that case, they were doing earlier into the foreign territory. The government has told to all these things that if you are setting up the reinsurance businesses into the GIFT City, then you will take the certain advantage. And due to that advantage, 36 insurance IIO, IFSC insurance office has started. We are doing majority of that work as a compliance, IFSC compliance, SEZ compliance, and AML KYC compliance. Again, if you see that the payment service provider, this is also a very big area, it's coming into India. So payment service provider license is also being given by the GIFT City. So we are doing in that arena also. These are statistics, basically earlier Asutosh has informed it. IFSC regulator registration 1034, I have taken from that website. So these are the very big business area flourishing into the GIFT City. So all chartered accountant can think about it. First you read it and you know about what that way businesses are going on. What is the STPI and DTA frameworks? As we have discussed with SEZ and IFSC. Now STPI, duty-free import procurement is again available. So in SEZ also available duty-free, in IFSC also available, in STPI also available. No minimum area requirement. Wherever you wanted to set up into the your office or your locality, you can set up it. The bonding is also not required. Only the license is required to be taken. Operation is very easy. Wherever you can do. What is the cons? Cons means whenever you wanted to raise a GCC bill to your foreign party, you will have to make a soft tax. Presently, up to 1st October 2026, government has made that you will have to file a soft tax and get it approved by the STPI authority. From 1st October 2026, the law is going to change. The notification is already been issued that in that case, soft tax is not required to file. Only EDF, a statement will be required to file. So in that case, that soft tax requirement presently is available. That working under STPI authorities, again, this is the requirement of that authority rule regulation you will have to follow. And DTA sale of services is restricted to 50%. If a GCC is there and if he wanted to sell into India, he will have to sell only 50% of whatever he is doing or businessing with that foreign party, means their parent company. So that is the restrictions are there in the STPI. What is the DTA? DTA means local, wherever you wanted to set up, you can set up. There is no requirement of particularly special licenses for your GCC. You will have to take whatever the PAN number, GST number, or whatever the regular license, you will have to do it. At the time of export, again, because ultimately foreign currency will come into GCC, you will have to, presently you have to prepare that soft tax. But this soft tax will be approved as a non-STPI unit. Presently, I think you may have chartered accountant. So if you are doing any that type of work, so preparing for STPI, the soft tax, which is to be approved by STPI, for DTA, you will have to establish a non-STPI unit, and these are to be approved by, again, STPI. But from 1st October 2026, the rules say change, and that approval will be done by the AD Bank. So this type of changes is there. So in the DTA, again, whatever the soft tax requirement of approval will also go. Detailed tax benefit comparison, again, income tax, SEZ, standard rate, because after 2020, sunset clause has come, so no tax benefits is available for any new unit setting up into special economic zone. IFSC, yes, it is 100% if your regulated approval is received. STPI, again, no income tax exemption. DTA, no income tax exemption. For custom MAT, I think this is applicable. Custom duty, again, everywhere exempted. DTA, no exemption. GST on export, again, all are exempted, and this is that thing. Next. STPI and DTA framework, I already told you. Framework comparison. What is the time taking in setting up the GCC in India? In special economic zone, 4 to 6 months, because you will have to prepare the application, you will have to submit to the SEZ authority. SEZ authority scrutiny it, they give the query, or if it has been done, then they bring it into the unit approval committee. So every month the unit approval committee happen, then thereafter minutes prepared and the license is given to you. And after that also BLUT or so many other applicabilities there for the operationalization of the unit. Again, in IFSC, slightly 3 to 4 months, STPI 2 to 3 months, and DTA 1 to 2 months. So if a client require immediate start of operation, then you can suggest for DTA. Minimum investment, medium to high, medium, low, and very low. Compliances burden in SEZs, yes, it's high because you will have to work under the dedicated zone. So whatever the entry and exit of the goods, whatever that your employees, everything will be regulated there. In IFSC, it is medium, but in STPI and very low in DTA. Location flexibility, again, special economic zone, you will have to go to the dedicated zone because anywhere it cannot be done. But in GIFT City, particularly in GIFT City, you will have to set up, you have to come into, if you wanted to set up in IFSC, you will have to come into Gandhinagar. Only one IFSC GIFT City is there. Again, export focus, as I told you, SEZ mandatory soft tax is required. IFSC, again, there is no soft tax, but you will have to, regulated entity is there. In STPI, presently it's there, and in DTA, there will be no requirement of approval of soft tax or your exports billing from authority. What is the plan? Planning means the entirety setup registration, 1 to 3 months it takes, or depend on your capability of fasting work. Launch, again, scaled, and 6 to 12 months. Infrastructures, office IT deployment, initial hiring, it takes 3 to 6 months. So near about 1 year plan is there, and Guru sir, Prashant sir has told that it is required. They wanted to first establish whether the operations are there, or that trust or whatever that the things is properly maintained. Then thereafter they scale it up. These are phase-wise detail. Phase 1, 1 to 3 month entry registration, 10 GST framework or approvals, banking setup. This takes any 1 to 3 months. Then phase 2, again office lease, IT infrastructures or systems handling. Then scaled hiring, knowledge transfer, all type of things takes again 3 months. And then thereafter they can, phase 4, ready to ramp up. Now I come to that, the second part of my presentation is the state government policies and where you will have to set up. So in Karnataka, again the policy status is like that. The policy is notified and it is valid up to 29. I think all the policies are near about up to 29 or 30. Tamil Nadu is already going active. So some policies are very matured and some policies are going to mature it. What is the capital subsidy? Again, I told you that so many type of subsidies are available. So in Karnataka, that 25% subsidies, whatever the capital investment you are doing. In Maharashtra, up to 20% of subsidies are there. Uttar Pradesh, UP is also announced some subsidies. Haryana, it is up to 40% subsidies are they are giving. Andhra Pradesh, 25% with some early bird incentives, they have announced it in their policies. Gujarat has also announced some benefits on the certification fees. These are rental lease assistance. Basically, so many state governments are also giving you, when you are setting up a GCC in their particular state, you will have to take that permission from DIC or whatever that certification, and then thereafter you are eligible for subsidy and lease rentals. So in Karnataka, 50% of rent reimbursement is given. Rajasthan, again 50%, 1 to 3 years, 25%, 4 to 5 years. Andhra, 50%. Uttar Pradesh, UP, 20%, and Maharashtra, 10 to 20% on zone basis. In Maharashtra particularly, they have divided into 2 zones. One is Zone 1, Zone 2. Zone 1 is Mumbai and MMR region, and Pune and PMR region. And rest of that, the other zone is there, Zone 2. So according to that, the 10% and 20% available rental lease assistance are there. Stamp duty and tax benefit. Since 100% stamp duty waiver is for Maharashtra, UPA, offer full exemption. Electricity duty also waiver in Gujarat, particularly in Maharashtra also. Property tax relief, Maharashtra, Rajasthan, Telangana, and other property tax exemption. SGST reimbursement, particularly only Odisha is given that SGST exemption. So different state government has brought their policy. Their long policies are there, near about 15, 16 pages or 20 pages. So these are the crux of that policy, whatever the fiscal incentives given by the states. Land subsidies and allocation. Basically, all that state government is having that IDC, development centers, just like that in Maharashtra, MIDC, Maharashtra Industrial Development Corporation, Gujarat, GIDC, Andhra Pradesh, AIPPA. So all these MIDC, or they have given the incentive or that given the preference on allotment of the land to that GCC centers if they are bringing and they are coming into their area. So in Odisha, if you see GCC hubs planned with, particularly hub also been, or particular park is also been prepared by the government. One more incentive they are giving, just like the Karnataka is giving on R&D, innovation and skilling. 100 crore on AI innovation fund. I think in India, first time, Karnataka is bringing with that AI innovation funds. Telangana is also TAI missions and asking task or T work, India's largest prototype centers. If you heard that in Andhra Pradesh, particularly, the Google has set up that data center or such type of things is coming up. In Gujarat, particularly, if you see, Micron projects has come, the semiconductors. We are doing that Micron project also, end-to-end supply chain we are handling. Government is given the incentive, 50% incentive has been given by the central government, 20% incentive has been given by the state government. So huge type of incentive, 22,000 crore project of Micron has been given. Then second project has come, KN's technology, which is also in Sanand, particularly in this area, and third is CG Semi. So three projects we are doing in Gujarat for semiconductor. Again, Tamil Nadu, if you see that the incentives, UP is also and MP is also giving. What is the Uttar Pradesh and Gujarat? So Gujarat, particularly Gift City and other IT projects is also there. They are giving that incentives. Pune and Mumbai. Pune is having that GCC of automobiles R&D centers. So we are doing for Mercedes, we are doing for Volkswagen, we are doing for other such type of automobiles R&D. And they are not from today. The 5 years, 10 years ago, they have established that centers. And I wanted to tell you that the GCC concept or the word has emerged in these days. But ultimately, that peoples were working through the IFSC, through the SCL, through the other way. They have brought 10 years ago, they have decided to come into India, but they have not independently set up their setup. I tell you one example of Panasonic. So earlier that Infosys were having 500 people of Panasonic into their own campus. They were providing the services, they have set up and established it. And once the maturity of the 5 years or 6 years has come, then they have come to us, we wanted to get it, that machine and everything, and that employee from one Infosys to our own establishment. So they have established it, and what we have done it, we have transferred that Infosys assets, whatever the assets were there with Infosys, we have transferred into the another SEZ's area, and that activity we have handled it. We have handled it a lot of such type of the initiation of the GCC, which has come up from the TCS, SCL, or whatever the big IT companies. Chennai, again, cost-effective and stable model. If you see, the rental are very less compared to the Mumbai, Pune, or Hyderabad, or Karnataka, Bangalore. Again, 100% electricity exemption is there, so 20 to 25% cost leverage. As Prashant sir has told that hub and spoke model, so you will have to see from the cost perspective where you wanted to set up that GCC. Again, since I told you that all the states of that India is pursuing to get that more and more clients, because they are setting the target that 1,000 GCC should be there in their state up to 2030, up to 2029. So in that case, they are giving the more and more incentives. They are giving the location advantage, the easy availability of land, and all the other benefits. The lower cost, port city, Andhra Pradesh is giving advantage, AP Industrial State Industrial Development Incentives they are announcing. Kerala, high literacy, again excellent quality of life, state IT policy incentives were available. In NCR, since that costing is high, but they are also having that more SEZs and STPI units in that particular area. One more thing that is happening into the SEZ and SEZ arena is demarcation. I tell you what the demarcation is there. In special economic zone, due to that sunset clause or whatever after 2020, income tax exemption is not available. So there were no further companies are coming into special economic zone for doing that business, setting up that businesses. So all the developer has gone to the government and they have requested that why not you allowed us to demarcate certain area, means denotified from the SEZ and give the same area to be non-SEZ activities. Government has issued a notification on 2024. Thereafter, the 50% of the area of all SEZ, major SEZ, because we are working with that Capital Land, we are working with the Brookfield, we have done that demarcation of the activities of the SEZ. So, if in all big area, 50% of the SEZ are using for SEZ activities, and 50% of the SEZ area which has been demarcated due to the notification is being used by the DTA activities. And that is also the very big things is happening in all over India. Again, MP is also coming up with that the target that again tier 2 city they are giving more exemption or more incentives. In Rajasthan also, Odisha also, and Haryana also. So if you see the comparative analysis of scale 1 to 5, if you give Karnataka, talent-wise it is very high, because out of 5, the talent is available into Karnataka. In Telangana, 4.5, Maharashtra 4, Tamil Nadu 3.5, Gujarat 2.5, and other Vizag is 2. So in talent, if you wanted to see that you want a good talent, then you will have to go to the particular state. And cost advantage, Karnataka is 2, because the cost is very high. Just Prashant sir has also told that the person are not happy in 14 lakhs, whereas the other place the persons are happy as a chartered accountant, happy in 8 lakhs. So if you see the Telangana 3.5, Maharashtra 3, Tamil Nadu 4, Gujarat 3.5, and 5 is Andhra, cost advantage. So highest is Andhra, or whatever the other state which is I shown you, the tier 2 cities also where the cost advantage will be there. Infra, again, that infra is very important, because the world-class infra you want, you will have to go, you should go to the SEZs, because they have developed and built up that infrastructure. Why the infrastructure is built? Because the government has given that incentive. Because at the cement and steel and everything, when they developed it, the 18% GST was not applicable. And incentive-wise also, you will have to see, and that rank is there. Focus cities, again, some cities has been targeted because due to that infrastructure and the availability of the GCC is there. So if you see Maharashtra, Mumbai, Pune, Nasik, Nagpur are the target cities. In Tamil Nadu, Chennai, Coimbatore, Madurai. In Gujarat, Ahmedabad and Gift City. In the other area, Tamil Nadu, Chennai, Coimbatore, and Karnataka, Bengaluru, Mysuru, Mangaluru and Hubli. So these are the things that you can inform to your client, that the selection of the cities can be also important. Connectivity and infrastructure, so Prashant sir has also included it in, but I tell you that what are the airport and flights destinations, that is very important. In Bangalore, 60 flights, international flight is there, whereas the Pune is not there, so that we will have to bring it to from Mumbai. 4 flight is there for international destination. Chennai, again 40 plus, Gift City via Ahmedabad, 35 plus. So these are the very important parameters you will have to see, or the foreigners see, that whether the availability of the infrastructures in airport, in metro, in IT park and SEZs, just like that you see, Bangalore highest SEZs are there, operational SEZ. SEZ may be there, but how many operationalized SEZs are there? So the maximum are there in the Bangalore. And again, power reliability. So ultimately, in power reliability, all SEZs are very above than the 95%. But if you see that Gift City is 99%, because the power infrastructure and whatever the infrastructure has been prepared is very good. Key finding at a glance, maximum tax benefit. Basically, you can see what that way you wanted to select it into, or what the foreign parties can select it. What is their maximum tax benefit you wanted, you should go to the Gift City. If you want maximum talent-oriented things, then you should go to the Karnataka, Bengaluru, and Telangana, and Maharashtra. If you want a flexibility in the operation, then you should select, and whatever the tax benefit in indirect tax, you should select that STPI. And if you want total flexibility, or you wanted to run a pilot basis, then you should, because ultimately foreign companies see and first, okay, हम लोग देख लेते हैं कि कैसे चलेगा, तो you should go to the DTA. Again, category-wise also selection should be there that way. If you wanted to set up a financial company, financial service company, or fintech or corporate treasury, then you should choose a IFSC because the regulations are there, the unified regulator is there, no need to go to any different authorities because here in RBI different, FEMA is different, then SEBI is different, then IRDA is different. So if you wanted to do that financial services activity, you should go to IFSC. Then if your more member is there, technical R&D is there, you should select SEZ because at that time your goods will also come because if you will do research and design things, then the goods movement will be there, and if you are bringing the goods from foreign party, I tell you what that way, just like that car engine or like that car accessories are there. So all the such type of automobile industries, R&D center or GCC are there in the special economic zone in Pune. So see according to that. Choose STPI if your flexibility is in priority and 5 to 500 employees are there, then you should select it for STPI. You can suggest to the client. And other DTA is always available for any purpose, any decision. What to watch? This is very important that all the things we read in different policies are not exactly same. Because sometimes the domicile things is important. Because in domicile clauses, you will have to read in particularly state policies, whether the domicility is there, whether the domicile conditions are being fulfilled by that the GCC being set up. That is very important. Otherwise, you will not get that incentive, whatever I told you in earlier slides. Draft versus notified. So many places the notified policies is not published or they are under the notification. So what is the legality of that policy is there, that you will have to evaluate it in your selection. Claim timelines. As you are aware about it, that getting that incentives from the government is very difficult task. So since you are consultant and that opportunity is there for chartered accountant, but I wanted to tell you to evaluate this claim timeliness, and when you will get the exact money into your kitty, that you should see in the particular policies. And fourth is infrastructures. So again, for selection the infrastructures, you are not that much capable or that much expertise, so you will have to always take the help of other consultants, just like that JLL or that big four real estate consultants, because they can give you, or otherwise you can also collaborate. We have done it. I tell you what, the way the business comes to us, we have collaborated with the JLL or like that, all the big four real estate consultants. They give us, we give them feedback of the regulatory update, we give them the feedback and the support in the approval mechanism, they give us the clients. So they also satisfied their clients that whatever the regulatory, because ultimately so many things you will have to do the free things. When the clients comes, they ask any 50 questions, 100 questions, and at that time you will have to provide each and every information to them. So that type of collaboration is also required in the business to grow up. Again, that is very important. I given the test basis like that. This is my opinion, that location-based metrics, if you wanted to set up a GCC, what that way, things that people are doing or whatever the practical experience. Technology and product development, basically you should go to the, first choice should go to the Bangalore, because the availability of talent is also there and the ecosystem is there. Second choice, Hyderabad people is choosing. Again, you can see, Aniki, this is on the basis of the practical experience. Engineering R&D, again, Pune, because I'm the practical, I have the practical experience. So the factory is also there in the Pune, and the all GCCs are there in the Pune. Mercedes are there, Volkswagen are there, Marquardt are there, so big, Aptiv are there, so big R&D operations are there in the, and second is Bangalore. They have the location in Bangalore and Pune, both the places. BFSI, financial services, again GIFT City, Mumbai. So these are the two things, two spaces there. Analytical data science, Bangalore, Hyderabad. Cost optimized operation, if such type of things are there, you should Chennai and Visakhapatnam or the tier 2 cities of the other state. Emerging technology, AI and manufacturing support. Again, if you wanted to have set up, so many GCCs are coming into India, having the experience of the services, and then thereafter they are setting up the manufacturing plant. I give you the example of my client, Marquardt, who is the German manufacturer. He have set up that GCC First, they have set up the JCC with the HCL, because they have given the contract to HCL that, okay, you set up the team for me, and then thereafter, after 5 years, they have taken that team in, and they have set up their own GCC in their own name, Marquette India Private Limited. And then thereafter, after 5 years, when they have established and everything, operation are good, they have taken the space into the MIDC area, and they have set up near about 16, 17 acres their manufacturing capability. So if you see the evolution of that things, the business runs by two way only. One is the manufacturing, goods or services. So if you wanted to do the goods manufacturing, you will have to come to India through, again, one more aspects I wanted to give you, the free trade warehousing zone. So if you wanted to do the trading activity, if the foreigner wanted to do the trading activity, he will have to not to open any offices in India. He can bring that goods into the free trade warehousing zone. The person who are having that operation of the free trade warehousing unit can keep his goods on behalf of the foreign parties. He can do the transaction on behalf of him, and once he established it, okay, his product is going to be well versed in Indian market, then thereafter he can think about the setting up of the GCC, because ultimately he will have to operationalize it, and he will have to evaluate whatever the way the operation can be done. Then thereafter, once he set up that GCC, he can go into the manufacturing activity. So so many companies are coming into FTWZ, they are keeping their stock there, they are developing the business in India, then thereafter they come into GCC, they are setting up the operation, and then thereafter, once the operation is established, they are going into manufacturing. Again, critical success factors, what the way you will have to analyze it, strategical alliance, GCC objective, parents organization. Ultimately, you will have to see what the parents organization or the client is thinking. So you take the output from the client, what the way you wanted to go. Because once you understood that all the policies, all the state, and all the mode of the operation under which that GCC can be set up, then thereafter, you have to ask the parent company what the way you want, whether he is a cost optimizer. Just like that, Americans are there, they are not that much cost optimization. But the other countries, I say Chinese or like that, Japanese, or they see from the costing point of view also. So if you see the Chinese are going to, they go in far deep, or that the other area, but the Americans and Europeans country, the parents organizations, definitely see either the Mumbai or other Bangalore or Hyderabad or like that things. So leadership commitment, again, strong leaders, global sponsorship, and dedicated Indian leadership. So ultimately, the role of selection of the site is also depend on the leaders. So if a person is sitting in Mumbai, if the parent organization or the Indian CEO, he would like to see that, okay, if the option are there, he will choose the Pune first. So this type of analysis is also there. Talent strategy, that is very important. Again and again, that the talent is required. But I have one doubt in my mind that talent will be in future 5 or 10 years when the AI will take that things into the prime in business or services. Then thereafter, this decision making is will also change it. Because the talent will become absolute, and then AI or their operation or their capability will be important. The last is compliance excellence. Again, this is very important. Nobody wants a headache, because in a special economic zone, if you wanted to inside it, you will have to have the pass. If you wanted to go out, if you wanted to bring any goods into SEZ, you will have to take the permission, whether it is duty paid or duty free, and when you wanted to brought out from the SEZ, you will have to show whether this duty has been paid or not. Otherwise, that custom officer will always ask the duty. So if you wanted to have that benefits, if you don't see that the major benefit of the custom is not there, then you should not go to the SEZs. The other arena is there. Okay, this is my company's information. We have the 280 employees. Near about satisfied partners client 350. We are doing developers and co-developers. It is very important in ecosystem that the developers or builders like that is there. We are working with the 200 plus developers and 19 plus years experience of my company, because I have completed 26 years, but the company I started in 2005-6 when the SEZ Act started. And IFSC units approval, we have done till date 400 plus IFSC approvals in the IFSC. We have done one channel also, WhatsApp channel, Instagram channel. So whatever the circulars comes into Gift City, we decode it with that analysis and we present into YouTube also. So you can join in my network also. And thank you for patient hearing. And you can ask me the question and answer.
If anybody want to ask any question, we can take 2-3 questions. Yeah, please.
Yes.
Sir, thank you so much for such a detailed presentation. My question to you is that can GCCs take advantage of the state-wise GCC policy as well as the STP, SEZ, STPI, and all of these different specialized zone policies? Can that be combined together, or it has to be either or? Because I don't think any policy is clear about it.
No, basically you can register it in only one scheme. Either you go to IFSC, then the 3 schemes will, the rules and regulation of the 3 schemes will not be applicable. If you go to the SEZs, then IFSC and STPI and DTA will not be applicable. If you go in STPI, SEZ and IFSC will not, DTA will not be applicable. So out of 4, you can select only one. And again, I tell you what the very interesting story. The very big project in semiconductor has come into India in Sanand. They have selected, one more is there in manufacturing, movers. I think you all aware about it. Movers scheme is also there. So that project has been registered in the movers scheme. Near about 5 to 7,000 crore rupees has been invested in that project, and then thereafter the leadership or that other thing thought that in movers one issues were there, that whatever the assets you are bringing into movers, the depreciation will not be allowed after 10 years. Because if you wanted, what is the scheme of movers, that whatever the zero duty import you are bringing, you will have to pay the duty at the time of removal of the goods from mover scheme. Means, which is not available, which is not there in the SEZs. In SEZ, if the capital goods are coming into India, the depreciation is allowed, and in 5 years, computers equipment is zero depreciated up to 0. The other asset depreciated to 0 in 10 years. But if you come into mover schemes, the depreciation will not be there. Imagine that 22,000 crore rupees projects, if they wanted to, any assets they wanted to sell it after 10 years, 15 years, they will have to pay the import duty of present value of import duty on the rate, whatever they have brought it into movers. So that was the negative things. So if you wanted to study it properly, what the way things is going on, this is very important. You will not believe, they have approached to us mid of that things, and we have gone to there. We are told that if you wanted to come into SEZ, this rule is required to be amended. Fortunately, in the law is also there, you can see in the public domain. Rule 18.6 in SEZ has been amended. We have made the policy advocacy. We have suggested that these requirements are required to change. They have changed it, and then thereafter the approval has been come to the Micron. I tell you, because then thereafter CG semi, and so that is very important to selection of the methodology. Either you go to IFSC, you go to SEZ, you go to movers, you go to, in manufacturing also. You can see, you can take this example into manufacturing also. So whenever you wanted to suggest anything, first things you will have to have the vast knowledge, experience. If you don't have the experience, you consult with the persons who are having the experience. Otherwise, if such type of projects is stuck in between, the whole investment after 10 years, whenever that person will be there, it will be an obstacle to them. Yes, yes, both. Basically, state government and central government policies are different. You can take both, once after all the 4 things you have selected it, you can take SEZ with state policies, DTA with state policies, IFSC with state policies. State policies, benefits, incentives, you can take it. There is no such type of restrictions are there.
So modern Indian GCC are no longer just executing routine tasks. They are hub of R&D and digital transformation that actively build the future product and operation of multinational corporation. Like the saying, the best way to predict the future is to create it. So GCC is like that. And I now invite my council colleague, CA Jinal Savla, to give a well-deserved vote of thanks to our speaker, please.
What an insightful session, as rightly said by Regional Council colleague Pinky Ketia ma'am. GCC are no longer just a support centers, but they are strategic partners driving innovation, governance, and digital transformation and global business growth. With this, I extend our deepest gratitude to our learned speaker for sharing valuable knowledge, practical insights, and enriching thoughts with us today. Sir, your expertise and guidance have truly inspired us and added immense value to the session. On comparison of GCC setting up in SEZ, IFSC, STPI, DTA in various Indian states. With this, I request all of you to carry a round of applause to our today's speaker, CA Ratan Moondra ji. Thank you so much, sir, for your valuable time and efforts. Thank you. So friends, now we have lunch break. 30 minutes lunch break, and post that we again assemble and start our second half session. Thank you.